Hey everyone, and welcome to Ownership Podcast. Today I'm joined by Hunter from Laso Finance. Welcome, Hunter.
Thank you, 8-Bit. I really appreciate having me on here.
Yeah, Laso is the next MetaDAO raise, the one that we've been waiting for a long time. Seems like it's very timely to finally have another raise there. So I don't want to waste any time. Let's just get right into it. So, Hunter, tell me a little bit about your journey into crypto. How did you come across crypto? When was your first time interacting with crypto? Were you like an OG Bitcoiner? I know a lot of people I've talked to on this podcast are actually from the OG Bitcoin era. So I'm wondering how you got into it.
Yeah, I mean, I think my first Bitcoin purchase was 2013 or 14, something like that. And just really did not appreciate the possibilities there. I went back and looked at my Coinbase account and saw, what my basis was there. And it was brutal. Like one of the worst, one of the worst things I have to look at is how many Bitcoins you got for $100 back then. And honestly really wasn't super deep into it. I around 2019, I joined Meta as an engineer. And while I was there on the side was kind of building some crypto projects, just kind of for fun. One thing I noticed is back then, 2019, 2020, there really wasn't that many good crypto card options like to spend them. I think it was really crypto.com was kind of the only one. Coinbase, Kraken didn't have cards. Crypto.com was the only one. And so I made an early version of Laso Finance under a different name that was no ID upload required, non-custodial, and built on Lightning, Bitcoin Lightning. And back then, Lightning user experience was really difficult. And so I launched that version of the card in 2020 at like the Bitcoin conference. I think it was in Miami, and absolutely nobody used it because it was just so hard to use. But the privacy, no ID upload aspect really resonated with people. But instead I just kind of forgot about it. I left Meta, made a couple different kind of projects with my friends like Tavern.fm. And then my friend said, hey, you should try the card thing again, and kind of double down on the privacy aspect. The no ID upload, you essentially just connect your wallet, sign in and you're signed up and you can get a card. That's how it operates on Laso today. So double down on that and launch that in 2023. And that was really successful.
What a coincidence that you went from Meta to raise a MetaDAO. I think that is definitely a funny coincidence right there. So tell me a little bit about how you came across MetaDAO and like what's your experience previously with just raising money? Have you ever raised from traditional venture? Or is MetaDAO like your first time raising money?
Yeah, I guess, and just to give viewers a little bit of background on Lasso, we sell prepaid cards to consumers, no ID upload required. You just connect your wallet, sign it on, so you're signed up. Don't need any additional information. You can get a prepaid card to spend online, on Apple Pay, etc. Yeah, so and started that kind of in 2023. So that's been operating for about 3 years now, and there's certainly been offers for kind of venture capital, typical rounds along the way, and it's never quite made sense because Lasso's kind of profitable from day one. Really, what I've wanted to do is a coin launch for a long time, but basically, in the beginning of Lasso, it was the regulatory environment was really not clear about what you can and can't do. As it became more clear, maybe in 2025, the meta, again, for lack of a better term, the meta strategy was like these pumped up fund launches where you have these coins that are pretty much totally divorced from the business. And they just didn't feel good. What was really important to me was that especially the existing Lasso users get to be aligned with the success of the project. And there isn't any kind of disconnect between team or investors or users taking care of the people that have been with me for 3 years is my top priority. So in April of this year, 2026, I went to SF for the Colosseum hackathon. And I went there and I talked to the Colosseum team, and I told them, like, hey, not interested in raising. Doesn't make sense. I met the MetaDAO team there and read through kind of all their docs in one shot, while Profit and Mista were there at that office, and it just finally clicked. Like, I can't tell you how many times I've looked at ICO launches over the past 3 years or talked to VCs about raising, and it's never fit, and then it just immediately clicked then, because that alignment between the users and the team is so strong. So I went from 3 years of saying no on the raising front to a yes. It just they found that right balance.
And so is there, so I downloaded the app, the Lasso app not too long ago.
Nice.
And I really noticed that the user experience was pretty good. Like I noticed that it was mostly Solana wallets. Is that correct? Or do you have like any other wallets from other chains? Because I know I just used Solflare, but yeah, I was wondering whether this is a Solana exclusive product at the moment, and why or why not.
It's not Solana exclusive. It launched originally on Ethereum mainnet, like that, and that's still, I believe it's still the majority of our volume, but it's Ethereum mainnet, the big EVM L2s, Arbitrum Base, Optimism, BSC, Stellar, Solana, and you can also send in Bitcoin and Lightning deposits. So it's pretty Omni-chain. I'm not just Solana specific, but I will point out that Solana users are by far the highest volume per user, if that makes sense. They're the richest ones. I would say
We're good spenders.
Yeah, you're good spenders, exactly.
Yeah. So if you had to describe to somebody who's never heard of Lasso, who's never tried prepaid cards, what is the thesis behind Lasso?
Yeah, what we're solving is privacy at the point of spend. So currently today we have assets on chain, and ideally, we've earned them either through work or lending or perps trading or whatever. And as far as kind of receiving those assets on chain, we're starting to replace a little bit of the fiat banking system, which is kind of the goal, right, of our industry. When we want to go actually spend those assets, ideally we're spending at a business that accepts crypto, that's a group that's growing really fast, but it's still extremely small, right? So instead, we'll send those assets to Coinbase or Kraken or exchange, sell to USD, and maybe we'll use a card there, or a lot of people, majority of people, will sell to USD, wire or ACH or SEPA instant to their bank account, and then pay off their credit card. And especially in that last flow, like, not only are we disintermediating the banking system or replacing it, we are just doing fiat banking with extra steps. Like, it's worse by a lot. And then we've lost our privacy. And the privacy is kind of a core tenet of what can make crypto as a industry be successful. And so instead, you can take your assets on chain with your wallet, connect it to Lasso, and get a prepaid cards to spend online, or Apple Pay or Google Pay, get gift cards. And you can also initiate bank transfers in the United States, the Eurozone, and in the UK. Essentially sending to a debit card. It's like a bank transfer. And you can do that all fully privately. And that gets us kind of one step closer to the ultimate goal of crypto, which is kind of giving the power of the money supply and the banking system to the people, rather than consolidated to a powerful few.
I think that there's quite a few prepaid cards out there. So what makes you guys any different than all the other ones? Like, I don't think asking the question at this stage of what's your moat is the right way to frame it, but what makes Lasso any different than any other prepaid card?
Yeah. So our focus is on privacy. I think we require the least amount of information compared to any of the providers. That is one that's been a kind of core tenet that we've executed on for the past 3 years consistently. Another one is stability. There's been a lot of providers recently that will do a version of this, which is a program that you can run for kind of a few months and then it won't work. So what you'll see from some other competitors is instead of a prepaid card, they'll have like a corporate card. So one of the kind of loopholes, if you will, is you can have a company and your company can issue corporate cards in that company's name. And then you can issue cards to give to your employees or contractors, and it doesn't have to be them on the card. It can be your company name. So those kinds of programs will start up, and that will work for a few months. And the compliance team at your issuing bank will review that and realize, hey, this company doesn't have 3,000 contractors that are using it all across the world. This is a kind of invalid program. So that's another category. And then the last piece, which is maybe a little bit less tangible, is just kind of dedication to a good user experience. I am very, very confident in saying that on the customer service side, Laso takes a way better care of customers than any other platform. And that's really important for products that are kind of privacy focused, because they can appear scary. If this is an anonymous product, how can I trust it? That kind of thing. And so generating the trust in the users is really important. And I'm very confident in that #1 customer service rating. Self-appointed, but yeah.
Yeah, you mentioned compliance, and that is something that I'm very cautious about when it comes to any crypto credit card or prepaid card or anything like that. So how does Lasso do compliance? And basically, what are the steps that you ensure that you stay compliant? And why do you think that matters even?
Yeah, great question. So the regulatory structure that we operate under is the same one that allows you to go to Target or Walmart or wherever your retailer is and get, for example, a Visa gift card with cash. Right? There's no ID upload there. You haven't identified yourself, but you now have this gift card. We operate under the same structure. So there are some limits. There's quite a few. The big ones are $1,000 max load. You can only spend basically $1,000 in a day. And then having processes in place to reasonably prevent somebody from getting $10,000 or more of what is called prepaid access. That's like prepaid cards. Overall, it's called prepaid access. $10,000 of prepaid access in a single day. And what I am excited about is Lasso can and does a better job of preventing that $10,000 limit than Target or Walmart possibly can. Like I today can go around to a bunch of Targets and Walmarts and buy a bunch of these Visa gift cards with cash and exceed that $10,000 limit because I'm going in person. There's no traceability. But Lasso can execute better on that front because when somebody connects their wallet, we first, of course, check Chainalysis, Webacy to make sure they're not counterparty to North Korea or whatever. We can look at device fingerprinting to see, okay, do they have anything in common with other users on the platform already to indicate maybe it's the same device? And then we can also look at the on-chain source of funds, which is the big thing that other retailers can't. Like even if you're spending on a credit card online or if you're doing cash in person, wherever, they can't do that, but we can. So we can have a much higher degree of confidence that this new user is not somebody who already served. So we have that kind of three-prong approach at the point of connection, and then we can analyze the transactions as well to determine how likely is it that this is somebody attempting professional scale money laundering. So we can execute at a higher level than other companies can from other surfaces, and it's definitely a point of strength.
I really love the comparison of these prepaid cards to serve cash.
Yeah.
Because I am also very much a believer in privacy, and I think it's just, it's a right, it's a human right, and so is cash. So I'm very happy to see companies trying to tackle this problem from like multiple angles, and I think prepaid cards are definitely one of these angles that are good to have. However, I think most people don't use prepaid cards, and they would much rather use a credit card or a debit card. How are these prepaid cards, or how is Laso Finance any better, or how does it improve upon traditional credit cards or debit cards?
So traditional credit cards, which do require kind of a full enhanced invasive KYC process, they will be accepted at higher rates at merchants, and then you have that reloadability essentially aspect, which is a strength. And so on those two factors, they are better than prepaid cards. Prepaid cards on the Laso platform are important just in terms of that maintaining the privacy. Currently today, users for some cards, they don't pay any fees. We get revenue essentially off the interchange. For some of the cards, they do have to pay fees. So one of the goals with this raise is ultimately we want to get to the user experience of spending with a credit card, and part of that is not having fees and eventually kind of having rewards. Those are kind of two gaps as well that makes Laso not as quite as good of a user experience on the credit card side. So once we get to that point, we're starting to get to parity. And if we can get to the parity in terms of user experience on fees and rewards of a credit card, on prepaid, having that additional aspect of having privacy with the card just makes it a total category killer in a good way. That's kind of the goal for this for this project.
And so about privacy. Privacy is very much a hot topic now. Everybody's talking about privacy. Seems like 2 years ago, nobody really cared about it too much, but in the last year or so, people have realized that, privacy actually matters a lot, and the way a lot of people think that the way to solve it is with all these, I don't know, I'm just going to say an example, but with something like Archeum or Umbra. Do you see any synergies between Laso and something like maybe Archeum, but not necessarily them, but something like along those lines with zero knowledge proofs, or using the privacy technology to enhance the privacy of Laso?
Yeah, absolutely. There's kind of new solutions like you're saying, ZK proofs, Archeum, that allow you to maintain privacy in a way that really wasn't possible before. Like obviously we'd love to be able to just take Monero or whatever. One of the difficulties with that is when we can't ensure that limit, like we can't ensure all the users aren't just really one person with that. But with kind of ZK proofs and I believe Archeum as well, you can kind of verify that this is likely to come from an individual wallet without exactly identifying that person. So there's some improvements to be made there, absolutely, on the essentially depositing or payment in side of things. However, until businesses are accepting payments on Archeum, then you lose that at the point of spend. And just to kind of zoom out for a second, one point on the value of privacy is I think like a lot of the times when people hear that about crypto, what they think about is, oh, you just want to have privacy to be a criminal or whatever. And that's not really the point here. It's not even really possible on Laso because you have to go and spend the card, at a merchant that accepts a prepaid cards. It's not like gold you can just transfer around. But the value to it is, even if you have your assets on chain and you're doxxed, you're at the same risk of seizure or robbery as if your funds are in a bank, right? And you can, if your wallet on chain is doxxed, you can say, oh, I lost my private key in a boating accident, but if those coins ever move, then the jig is up, right? Like you still been identified. You're at the risk of seizure, risk of robbery, just the same as with the original banking system. And so being able to fully participate in the economy, maintaining privacy the whole way, is a really, really important part for cryptocurrency to achieve its ultimate goal, replacing the fiat banking system. And that is what we're accomplishing. That's why it's important. It's sort of like how having decentralization of a protocol is important, even though you don't like expect the government is going to come and shut your node down. You need to have that capability for it to be successful and for everybody to buy in. And so having privacy at the point of spend is the same kind of core tenet that we need.
And to get back to to the topic of the raise, I really just want to dig into what the intention behind the raise is. Like, basically, what is next? How are you going to scale Laso? And because I think that the design space for prepaid cards can be pretty huge, and so I'm wondering how you're going to expand Laso once you've done this raise.
Yeah, got it. So to kind of set the context of where we are now, pre-raise, and that helps. I'll go into that so that it helps understand what we'll execute on post-raise. So in the last 30 days, we've had a little under $750,000 of volume into the platform, resulting in around $35,000 of revenue, representing significant growth. And ultimately, we wouldn't even really necessarily have to raise like that. It's profitable. It's default to live. But there's a few different things that made raising now on MetaDAO make sense. One is, right now, 96% of our volume is humans, just like I described. You just go on, connect your wallet, get your card. 4%, around 4% of volume is now coming from AI agents. So something that's really fun about this really frictionless sign-up process is your AI agent, meaning like OpenClaw or Hermes. You can send it a single prompt and it can go get its own Laso card, go make its own transactions, and send its own bank transfers, credit, gift cards, things like that. It seems inevitable that within 18 months, 2 years, agentic commerce will start being a very significant part of the market. And we want to make sure that we have the funds to execute on that as well. Right now, it's just 4%. But what I'm really excited about is not the use cases we're seeing a lot right now, which is you use your agent to like buy tickets for your trip or something, like a essentially incremental increase in consumer consumption. I think what's more exciting is using these agents to go and build businesses, to be kind of like agentic entrepreneurship, build up their own website, get their own hosting domain. And to do that, they need all this financial tooling. So right now, the agents can go and get a card to go buy domain hosting and buy ads for their whatever their GLP-1 reseller website is, or whatever the business is. But they need all the tools. So we want to add the ability for agents to have bank accounts they can receive funds into and send out, and then also a reloadable credit card bin, which requires an enhanced KYC process. So to achieve that, and to achieve the increased volume I talked about earlier, that allows us to get to the point where there's no fees and you get rewards. Those are the kind of the two goals for the raise. So in the raise, you have a $750,000 minimum. And what that allows us to do is kind of for 18 months, cover essentially payroll for me, for a new marketing user experience role from a longtime user of Laso that I'm really excited about, and upgrade our customer service side from just 8 hours a day to 24 hours a day. And then executing on increasing volume through a combination of doubling down on the marketing channels that are working well, like Google PPC is in the last 3 days had a 16x LTV to CAC ratio, which is that's crazy. It's a super tight campaign, so it certainly will not scale very much, but it's exciting. So doubling down on those, and then a combination of reducing fees on some of the products. And kind of the reason that's important is if you double your volume, like payment volume, your revenue doesn't just double, it maybe increases 120%, because as your volume goes up, you get more of an interchange share or more of a discount from the issuers. And so increasing that volume is not, it's super linear returns. And we need those super linear returns to eventually make those cards no fee and be able to return rewards. So executing on those first two, payroll, marketing, having more float available. One of the problems that's kind of silly right now is, we're taking orders 24 hours, 24/7. We have to kind of wire into our partner issuing banks, which of course is only banking hours. And so especially maybe on federal banking holidays, we're taking orders, we're receiving funds on chain, but we can't, from Friday 5:01 p.m. until Monday 8:59 a.m., we can't get funds back into our issuing banks. And so sometimes you run out of stock, which is embarrassing. So fixing that's the third one. And the fourth one is on the agentic program stuff, which is giving these agents all the tooling they need to fully participate in the internet economy. Once they have the cards, prepaid cards Lasso has, banking, and reloadable credit card bins, now your agent can do every single thing a human can do. And then we can start to see them build businesses that either weren't going to happen from organic intelligence or just simply weren't possible.
Let's continue talking about agentic finance, because I think it's very much a topic that's been coming up more and more as people iterate on how to actually do it. There's been many tries. I think there's been the X402, which has not really been that successful. There's also tries with smart wallets, and I think prepaid cards are something I've never thought of as being something that agents could use. But the more I think about it, the more it makes sense, because of agents need, the problem now with agentic finance, right, is the infrastructure just doesn't really exist. You can't, or it barely does. So how do you think, what do you think is the biggest problem, or maybe your favorite problem that agentic finance or payments can solve, and do you think that's the future at the end of the day? Do you imagine people actually texting their chat GPT or whatever to execute with their prepaid card?
Absolutely. I do think it's the future, and I'll kind of walk through my thinking on that. This is really clearly the direction that I see kind of agents going, and I understood that, or I believe that. I'm sorry, I'll say it. I believe that kind of maybe around the chat GPT or GPT 3.4 era, and there just wasn't a way for agents to use tools until OpenClaw. So right now in agentic commerce, we're in that book, Crossing the Chasm. We're at that 1% tinkerer phase in the curve. So everybody is kind of just toying around. And mostly when people think about agentic commerce, they're thinking about it in just the way you described, which is enhancing the execution of consumer consumption to, the example we'll see is agents come in and they buy snacks for the office. Getting your agent to buy a snack for the office it's slower than you doing it as a human, right? It's not a much better experience, and billions and billions of dollars, and really smart people have worked on making consumer consumption on the internet really good, right? It's everybody who works at Amazon is working on that problem, and they've worked on it for 20 plus years. Even if we get agents to be a better user experience for I'm wanting to purchase something, it's incremental. It's an incremental improvement on existing consumer consumption. It's sort of the same as your checkout flow, A/B testing your checkout flow, and it improves whatever conversion 15%. It's not as big of a deal as the part that I'm excited about, which is using these agents to build businesses. I think that's why the TAM of agentic commerce is so large, is what people are hoping for and what we're excited about is not like this digital butler for me that goes and books my flights. That's maybe nice. I probably won't increase my own personal consumption that much more, right? Like the total GDP probably doesn't increase that much more if it's slightly easier for me to book a flight with an agent than it is to type it in. I think the bigger deal is using those agents to build businesses that otherwise wouldn't exist. I just did a podcast with Profit at MetaDAO, and he gave this example of, so there's these Pokemon gacha machines. Are you familiar with gacha, like little?
Yep, I think
machines?
they've been just blowing up on
Yeah.
Twitter recently. So yeah.
Yeah, I think it started as like these physical machines in Japan, I believe, and it's sort of a slot machine-esque kind of a toy thing, but those are blowing up. Pokemon is, I'm just totally copying Profit's stat that he gave to me, so don't fact check me. But Pokemon cards are the number one toy collectible market, very large primary market, and a very large secondary sort of reseller market. The number two, at least in the United States, is Hot Wheels, little toy cars, very big primary market, almost no secondary market. And so Profit talked about like, hey, somebody needs to make Hot Wheels gacha machines. And it's a good example of maybe something you could try out as building with an agent, because maybe it seems like, oh, it's a little bit small of a market. Maybe I'll get around to trying that, but there seems like there's other bigger opportunities. But that's something that you could probably execute 100% with an agent. And that's kind of a good example. Maybe if you're already passionate about Hot Wheels, you would already make that business. However, there are the number 3, number 4, down to number 20 toy collectible markets that are very unlikely to get built because the human labor cost of it is too much, or the exploration cost is too much. If you trained your agent to build this kind of Hot Wheels gacha machine market, it's very, very easy to spin up the remaining 18 parallel agents to execute on those next 20 businesses that otherwise, if we relied on organic intelligence on humans, those simply would not exist. And that is what we are building towards. To make it more succinct, we're not building agents to make you as a consumer consuming easier. We're building agents to build businesses that otherwise would not exist. That is what I'm excited about. That's why the TAM is so big.
Let's say we're 5 years from now, and let's say Lasso is a super successful company with billions of dollars of revenue or volume. What do you think would be the decision that takes you there looking back? Like if you look back 5 years from now on which decision puts you on the road towards being that successful, what do you think the decision would be?
Yeah, it's a great question. I think kind of like we described, there's two parallel product lines from the same infrastructure. There's the kind of the human side, which is privacy preserving at the point of spend. And there is the agentic finance side, which is essentially enabling frictionless agentic entrepreneurship. And both have that capability to reach the outcome that you described. And I'll go through how each one gets there. So on the human side, we will not get there until the user experience of using a prepaid card is just as good as a credit card. User experience meaning acceptance rate and rewards and everything like that. So ideally, at the end of 12 months after this raise, we'll have increased volume enough that we can eliminate the fees completely across the products and return rewards because we can earn interest on those balances that are sitting there. Currently, like if you come onto Lasso and you buy $1,000 card, we spend that $1,000 at the partner card issuer immediately. And if you take a year to spend that $1,000 card, no interest is gained on it. It just kind of sits there inactive. It's very capital inefficient. And that's because we're not at high enough volume to integrate fully in the stack with the issuing bank. So as volume increases, we can go kind of move down the stack to the issuing bank and have a much higher level of capital efficiency. So at those higher volumes, no fees, be able to return rewards that are generated from interest, on those cards kind of before they're spent. and another piece that we need to build there is sort of possibly synthetically creating reloadable cards by being able to automatically pull value off of the cards. I think both those things together clearly can get kind of to the valuation you described. The number one competitor in the space to Lasso is Bitrefill. They started a long time ago. Their focus is much more on the gift card side, but from some on-chain sleuthing, we can see with very high confidence that their volumes are around $500 million a year. They're not necessarily trying to recreate the credit card user experience. They're just kind of a big catalog, and they do an excellent job at that, a phenomenal job. But the credit card user experience is kind of our goal. And so $500 million of volume is the absolute kind of floor of what's possible on the human side. On the agentic side, that is much more of what you think about as like a typical venture scale payoff, where it's either $1 trillion or zero kind of thing. There could be no there, right? Like it could just be that what really works on the agentic commerce side is kind of what you described, which is essentially an extension of asking ChatGPT what weed killer I should buy for my house. It improves the GDP of the world, but just kind of the same way that like an improved checkout on Stripe does. It could also be that we don't get to the level of intelligence where you can trust an agent to really operate a business or identify a market. And that is certainly possible, although that sort of implies you're short AGI, which just doesn't seem like the winning theory, but that is possible. Another piece is, I'm describing kind of all the risk on the agentic side that would make it a possible zero. Another risk is that getting a card program that through, let's say, Stripe or Revolut, where me as the agent operator goes and signs up, I kind of let my agent know about it, and my agent connects the API keys and is setting up cards, for example, through there. Maybe that is sufficient. And that is also totally possible. What we are betting on is that having these sort of permissionless fiat rails for agents is a much bigger unlock than what people think. Like kind of what you were saying is like X402 is this agent native way to transact, but not a lot of businesses have accepted it. Lasso is essentially like X402 for normal fiat rails, if that makes sense. Like now your agent can go and transact kind of anywhere that prepaid cards are accepted. They don't have to accept X402. And it is a way of executing on X402's goal without requiring the supply side to adopt it. Does that make sense? And so that if what we find is having the agents be able to have permissionless rails to execute, and they're able to execute on business objectives at the sort of entrepreneurship level, that TAM is gigantic, right? It's bigger than 5 billion. It is a world-changing event in a way that incremental consumer consumption isn't.
Are these cards globally available? Like how do you see the trend of merchants accepting these prepaid cards? Are more merchants accepting them, or less merchants accepting them? Do you see a clear trend there? I feel like that could maybe also be a risk when it comes to prepaid cards.
We are available globally. The majority of the volume is in the United States, and then next is the EU, and then Canada, and then Australia. Prepaid cards have existed for a long time before Lasso, and they'll exist for a long time after Lasso. So most of our focus is on creating the best prepaid card experience that we can, rather than maybe trying to like move the market of acceptance, but kind of by default, all your card processors will accept it. Things we can do are, like we talked about, having a more direct relationship with the issuing bank. That allows us to enable things like 3DS, for example, which is a form of verification to make sure the card isn't stolen. So there's quite a few things where you can get to the prepaid card acceptance is very, very close to a reloadable credit card. And on the agentic side, kind of our thinking there is we want to give the tools as much, and we want to give the agent as much tools as it can from a frictionless perspective, like the prepaid cards, and then have essentially an optional upgrade where the owner of the agent can do kind of an enhanced KYC process if the agent runs into something where it can't spend. Because there are some cases where prepaid cards certainly will not be accepted, and that's things that essentially enable money laundering. There are things that are called transfers of value. And it's just using your prepaid card in a way that would allow you to clean your funds. So that'd be things like buying gold or withdrawing cash. You can't do that, and that's not going to happen. It's very unlikely to happen in the future. And so we want to have kind of fallbacks where agents can, whatever goal they're trying to accomplish there, we have some other option for them to complete.
One dream that I have for the future is for all the finance to be on chain, and I think you probably share that as well. So that I would say I'm somewhat of a cypherpunk, somewhat of somebody who doesn't like rules that much and likes transacting on chain. So I have two questions, but I'll just ask the first one first. First of all, if everything is on chain, and so I see Solana and Tempo, and I see our Plasma going after the on-chain payments. Now, once everything is on-chain, first of all, do you think that's even possible? Yeah. So first of all, do you think that is even probable that it happens? I feel like it'll take at least 5 or more years before the world catches up to on-chain. But how do prepaid cards stay relevant in a world where all the transactions are on-chain? Or do you imagine a world where these prepaid cards can be used via crypto, if that makes sense?
Yeah, that's another great point, and a great risk is if all businesses start accepting crypto naturally, then you probably don't need Lasso prepaid cards in that example, and that's absolutely something that can happen, and kind of ideally it does happen at some point, right? That's kind of like all of our goals. However, that's been a goal for the industry for at least a decade, and one of the problems with converting everyone is, like, from the perspective of a business, the incentive to accept crypto if you're not a crypto native like us is just not that high. You have this, like, for example, the Visa card network was able to start because the businesses were already extending credit to their consumers in this very unstructured way, and there was this immediate kind of increase in sales and ease of back office operations whenever they started accepting cards. And so it was very easy to create this sort of three-sided network that was necessary. And on stablecoin payments, we just don't have that. From a business operator's perspective, it's still not a big enough improvement to make that change happen. So yeah, that absolutely is the goal, that we're all accepting stablecoin payments. It still hasn't happened after all these years. And so all Lasso can do is fill the gap to make private spending possible with what we have now. And I think that'll continue for quite a while.
And my second question, which I don't know if it kind of connects, but is there any synergy or overlap between Lasso and DeFi? Like, I'm not exactly sure how that would work, but I'm wondering if you've thought about it in any way.
Yeah, it's I mean, just it is an easy way to spend kind of your funds that you've earned on DeFi. I think the more interesting aspect is probably on the agentic side. There are probably in crypto, the form of agentic commerce that has so far found the best product market fit has been on the DeFi side, like these DeFi agents. because you have to look at you're exploring these DeFi strategies. Your context window has to be so large, and they're starting to execute well on that. So enabling them, like for Claw Pump, for example, is helpful because now your agent can buy research or buy API access that it wasn't able to do before. So that there is synergy there, but really, Laso's goal is just to be able to give all the tools so an agent can do anything that it needs to. And then as those verticals start to spring up, like maybe DeFi agents are one of them, then be able to build around it. But we're still so early in the crossing the chasm that it's just more about making sure they can do everything they want to first.
Awesome. I think I'm sort of out of questions. You answered everything pretty well. It was a very good conversation. Do you think there's anything we missed? Maybe any topic you would love to bring up that maybe we haven't talked about?
I do kind of want to double down on the philosophical kind of purpose for the raise in terms of users. And we touched on it a little bit, but what I really want to emphasize is the reason that I'm launching on MetaDAO is because it gives me the best chance of rewarding the users that have been with me and Lasso all this time. Like currently, the only way that Lasso users really are financially incentivized for the success of Lasso is through referral links, which just aren't quite the same alignment of incentives. And the pumped out fund launches also don't really align the team and the product and the users, and MetaDAO does do that. And that's really kind of my top priority. And I just want to make sure that's clear. Lasso didn't necessarily need to do this raise. It can accomplish all the goals it has just on a much longer time frame. But really the reason is I want to be able to reward all the people that have been with me all this time.
Well, I think that's it then for today. Thank you, Hunter, for coming on the show. Thank you to MetaDAO for sponsoring, and also thank you, Umbra, for sponsoring the episode. And I will see you guys next time. Goodbye.
Wonderful. Thank you.